This half hour of our Talk to the Experts, a presentation of Buckberger Baerg Partners, professional accounting firm in Saskatoon. Andrea Harris is my guest. Andrea is a Chartered Business Valuator. This is going to be an interesting show, especially for someone who owns a business or someone who's contemplating perhaps buying a business. Andrea, welcome to the program.
Thanks, Brent.
Let's just start off with a little bit of background about your company. Buckberger Baerg Partners, professional accounting firm on Main Street here in Saskatoon, just off Broadway.
We like to say we're still one of the fastest growing accounting firms in Saskatoon in the province. So we've been around for, it'll be 7 years this summer. I'm one of the newest partners at Buckberger Baerg. We have 11 partners at our firm. I've been with the firm for over 5 years, and we practice in lots of different areas. So obviously business valuations, accounting, assurance, tax, advisory, kind of a full service public accounting firm. We're local, so we're here in Saskatoon. We're Saskatchewan based, born and raised, and this is where we call home, and we like working with our local clients.
And the service that we're going to be talking about today is that of business valuation. I don't know that there's a lot of business valuators in our province. Why is this such an important service for businesses?
Our office has 2 CBVs as well as supporting staff. And with only a handful of offices in the province having, teams of multiple CBVs, this really gives us the level of technical expertise to be experts in this area. I think it's interesting and it's important for business owners and stakeholders in businesses to understand the value of what their business is worth. And I find it really rewarding because I get to help business owners in different situations every day. No 2 days look the same.
So in your work, what are business valuations really needed for?
You mentioned that buying or selling businesses is one that typically comes to mind. But there's lots of reasons why people might need to know what a business is worth, such as matrimonial settlements, either under a collaborative process or a court-based process. There might be a family transition of the business where you need to know what it's worth. For tax purposes, you might be doing some tax reorganization and need to know what your business is worth. You might be scaling up, going for financing, need to understand your cash flows. The bank might need some assurance as to what your business is worth, what your cash flows are going to be. Unfortunately, sometimes we get involved when things have gone sideways and there's litigation and shareholders are no longer getting along and need to either buy each other out or split up the business. And so the users, they can be business owners, but sometimes they're the spouse, sometimes a lawyer, a mediator, or another advisor reaches out to us. It can be even, the business owner's own accountant if this isn't an area that they specialize in, or if their accountant maybe does specialize in this area, but they need somebody to come in who's independent, who can, be that independent expert and give that independent, aspect to the situation.
There's going to be business owners out there who say, well, I don't need a professional like this. I'll just take 3 years of my net profit or 5 years of my net profit, and we'll roll that all together and put some goodwill in there, and I'll come up with a magic number. Is it that easy?
Yeah, I wish. It's usually more complex than it appears. And, oftentimes when you think about valuing a business owner might, like you said, think about what the tangible assets are worth and then adding that goodwill piece. So, the tangible assets, their land, their property and their equipment, their cash, accounts receivable, inventory, less the debt. But then the tricky part is really that intangible asset piece, the goodwill, the name, the reputation that you've built. And that's really driven by the cash flow that the business can churn in the future. So understanding the value of that intangible asset typically comes down to understanding the risk of realizing on those future cash flows. So we could dive into, how do we normalize cash flows? How do we come up with a discount rate? How do we come up with a multiple? But I think one thing I want to just touch on in a little bit more depth is understanding for an owner-operator business, what's the difference between personal versus commercial goodwill? Because commercial goodwill is something that a purchaser is going to buy or that's included in the value of your business. Personal goodwill is not. So personal goodwill, this is what the business owner's intrinsic value brings. And this is what walks out the door when they leave. Commercial goodwill, this is what stays behind. So this is what a purchaser is going to buy. So you might say, well, Andrea, how do you know if I have personal or commercial goodwill? Well, if you're kind of gut checking this yourself, The kind of morbid thing I'd say is, what if you got hit by a bus today and you didn't go into work tomorrow? And if you say, well, it's fine, my management knows what they're doing, they'd carry on without me, and I'd say, perfect, you've got commercial goodwill, that's great. That's going to drive a higher multiple, it's going to drive a higher value. If you say, well, the business can't run without me, then that's an indication that you're probably dealing with personal goodwill. So, if you engage a CBV, we can come up with valuing your business and understanding that, but we can also take it a step further and help you to look at how can you translate that personal goodwill to commercial goodwill. Most people, they'll get a valuation done, once or twice in their life. You might sell your business once, but you might have other major events where you need to come up with what the value is worth. But as a business owner, your expertise lies in your business. That's what you're good at, is running your business. And for me, as a CBV, I can look at many businesses. So I can see how they operate, I can see what drives their value, and then I can come in and look at your business with an independent point of view and really be able to dig more into how that applies to your business.
Do you run into situations where maybe a business owner has a hard time, I think of more the pride of ownership, having a hard time agreeing with a valuation?
Yeah, certainly. I think that since it is complex and there's lots to go into it, as a business owner, emotions get involved, and your unconscious bias as to what your business is worth can be a factor as well. So having that independent mind frame to be able to come in and say, okay, I have no skin in the game, so I can come in and I can look at this independently and say, this is what the value is, or this is what somebody would be willing to pay, and give that kind of insight and perspective.
Have you seen examples of valuation situations going terribly wrong?
Yeah, so you kind of mentioned earlier, you maybe heard people talking about valuing a business, and they might throw something out like, oh, my business is worth 5 times EBITDA or 3 times earnings. But what does that actually mean, and how does that apply to your business? Businesses might be comparable, but often they're still very different. I'm going to dive in a little bit into a little bit of valuation theory. Bear with me, I won't go too deep here, but a couple of concepts are the concepts of enterprise value versus equity value. And so enterprise value is the value of the assets. Equity value is what's left after you pay off your debt, so what you get in your jeans. If you compare this to a house, enterprise value is the value of the house. Equity value is what you have left after you pay off your mortgage. So when you're thinking about multiples, times earnings, times EBITDA, are you buying the house or are you buying the equity that's in the house? These multiples or these rules of thumb, if they're applied incorrectly, you could be paying $1 million when you should have only paid $500,000 if you're kind of applying it wrong there. Something else that can go wrong is if a company has a significant amount of assets, maybe they, insure those for a high dollar amount, or they've had an appraisal, or they have an idea of what they're worth. So they think, the value of the company is worth this because this is what my assets are worth, but maybe the cash flows don't substantiate it. So the purchaser might purchase the assets at kind of that full value without understanding that, what's the value that's actually going to be driven from the cash flows of the business. What are you actually going to get for a return on those assets?
We're having a Zoom session on our experts this half hour. It's Brent Loucks along with Andrea Harris. Andrea is a partner and Chartered Business Valuator with the accounting offices of Buckberger Baerg here in Saskatoon. Check out their website, bbllp.ca, bbllp.ca, or call the office, which is on Main Street just off Broadway during business hours at 306-657-8999. More about business valuations when we return to Expert Show for Buckberger Baerg and Partners, accounting firm Saskatoon. Our guest is Andrea Harris, a partner with that firm. Andrea is also a Chartered Business Valuator, and that's really what we're focusing on this Experts program, talking in the first half about some of the things they look at when they're valuing your business. And in that case, we were talking about a business transition, such as a purchase or a sale. What about other situations, such as marital breakdown? Do you do work in that area too when it comes to valuing assets?
Yeah, absolutely. So I have qualified as an expert witness, meaning I've come in as an independent expert to value the business and can be can be available to do that. We also see, people going outside of court too, maybe under the collaborative process. So the Collaborative Professionals of Saskatchewan, I'm also a member of that. So working under that scenario. So not, doesn't necessarily mean that, both sides have come in agreeing, but both sides have come in agreeing that they're going to reach an agreement out of court. So, kind of whichever route that the parties are taking, I'm certainly available and can work in those situations.
Talk to us a little bit about timelines involved when it comes to getting a business valued.
So every situation is different. So the process really starts with understanding the client's needs and their interests. So, how are the parties involved? What's my role? Do they need an advocate or an advisor? Or do they need an independent expert? What are their timelines? Do they have deadlines that need to be reached? And the first step, so it's really laying out the framework of the engagement. And then comes the information gathering process. So like you mentioned, maybe if it's a farm and there needs to be appraisals done of some of the equipment or land or other, major tangible assets in the business, that's part of the process. Getting the financial information, learning about the operations, learning about the business, really digging in, maybe meeting with the business owner, maybe touring the site. And so really learning about the risks and the expectations for future cash flows in that business. And then from there, we do our analysis. We're going to provide some analysis for the client and have some drafts to go over. So depending on whether you're involved in the business or not, this is a key piece for kind of both sides, because there's an education component, there's some back and forth, there's really, understanding what those numbers mean and digging into the analysis. The best advice that I would give is that this process, since it is so involved, it's not just a back of the napkin, here's your number and carry on. It takes more time than people usually expect. And so reach out early. It really, the timelines can vary. It can happen very quickly when all the parties involved are, really cooperative and the information's easy to gather and everything kind of happens as planned. But sometimes it takes longer. Business owners, they're busy running their business. So, for them to be getting information, it can take time. And so reach out early and expect that it will take some time to kind of get the proper analysis completed.
Someone listening to us right now, a business owner, or perhaps someone who's considering purchasing a business, they want to find out more about the business valuation process at Buckberger Baerg. I'm guessing it all starts with an initial meeting.
Yeah, absolutely. Starting with a consultation to kind of understand their needs and understand how we could help them is really step one. So reaching out, with a phone call. And so we can talk through, what is your business? What might be the approach to valuing your business? There's different approaches to valuing businesses depending on the industry that you're in. And so really diving into those kind of information gathering steps to know how we can best help you is step one for sure.
Having a discussion with Andrea Harris, a Chartered Business Valuator, about getting a business valuated. She's with Buckberger Baerg Partners Accounting here in Saskatoon. We've heard a lot in recent years about the family turnover of business as well, the number of businesses where the owners are aging out. I'm guessing that's an area you probably have to work with as far as coming up with a fair value on a business when it's a family transaction. Yeah,
absolutely. I think, you always see family transition of businesses, but we are seeing more of them, right? The boomers have worked maybe longer and, put off their retirement longer than they planned, but those businesses are starting to transition and have been transitioning. And so whether it's families or whether it's a management team that they're transitioning it to, it's so important to know what that's worth. There might be other kids involved. There might be, other financiers involved or other people coming and buying equity. And so understanding that value so that, maybe at this point, everybody kind of agrees, but sometimes a few years down the road, you could get in a situation where at that point, start questioning, well, did we do this right? I kind of know we came up with this number, but how do we come up with that number? Did we get good advice, or like now that seems a little bit off? So it's certainly easier to deal with it up front than a few years down the road, kind of wonder if you went through all the steps that you should have and got the analysis that you needed to for that peace of mind to know that how you went through all of the transaction made sense.
No regrets.
No regrets, exactly.
I could have got how much for my business? Well, it's a fascinating process, and I'm sure there's people listening who'd like to find out more, whether they're business owners or they're contemplating perhaps purchasing a business, or maybe they're going through some family transitions and marital breakdown, and they'd like to get some of this valuation information. It's as simple as a quick call to the offices of Buckberger Baerg Partners, 306-657-8999. And again, check out their website to see our guest, Andrea Harris, and all their staff at BBLLP.ca. I learned something on this half hour, Andrea. I appreciate your time. I'll leave any final comments to you as we put a wrap on our Talk to the Experts for this half hour.
Sure. Well, I will say, if you're thinking about selling your business, there's a couple key things that I would like for you to think about. One of them, cleaning up your balance sheet. Think about what you need to move off of there, whether it's, rental properties, investments, things that business owners might have in there, but a seller doesn't want to buy. Number two, getting organized from a tax perspective. So our firm is more than business valuators, as I mentioned. We have one of the biggest and I think brightest tax teams in the province. So having the appropriate tax structure sometimes needs to be put in place, maybe 2 or 3 years ahead of the sale date. So it's important to get that organized before it comes time to sell. Number three, working capital. Managing working capital is key because negotiating how much working capital is part of a sale price is often one of the most contentious areas. So making sure that your internal financial statements make sense so that when you're going to do the transaction, that you can really understand what your target or your typical working capital is. And most importantly, number four, if I've lost you, come back in for this last point. If you're a small business owner looking to increase the value of your business, my critical piece of advice is to work yourself out of a job. So make yourself redundant. Many business owners, their business is their baby. They themselves are the competitive advantage or were the competitive advantage. And so this isn't easy to extract yourself, but we can help you with that too. So think about that concept of personal goodwill versus commercial goodwill and what value walks out the door when you walk out. If they can buy your business and run it without you, that's when it's worth the most. So business valuation, it is a complex area and every situation is unique. So to have a CBV from a CPA firm in your courts as one of your professional advisors or independent experts can help provide you with the peace of mind to navigate these complex and unique situations. So please reach out, give me a call, send me an email. My contact information is on our website. As Brent mentioned, BBLLP.ca. I'm always happy to have a chat. Thanks, Brent.
Oh, you're so very welcome, Andrea. And again, for our listeners, you're a business owner contemplating selling your business, maybe the farm, whatever, and you'd like some of Andrea's insight as a business valuator, give her a call. The offices of Buckberger Baerg Partners, 306-657-8999, online, BBLLP.ca. You've been listening to Talk to the Experts on News Talk